Thanks for having me, and thank you for the great intro. It's clearly the one that we use to sell some of our tech products, as you can probably tell. I'd just like to say how moved I've been so far today with the welcome, the acknowledgement to the traditional owners of the land. We've got a lot that we can learn from New Zealand, I think, when it comes to that. So, particularly with the use of language. So, my dad's history is to the Wiradjuri people, who are a large nation which is to the south and central west in New South Wales, and most of our First Nations communities have lost all of their language, with the exception of me saying Mandanguru, which is the language of the Wiradjuri people, which is thank you. So that's about as much as most of us have got, so I think we've got a lot to learn from New Zealand. The other thing that's been great in the last couple of days of being here is being congratulated for our sporting prowess, and which is something that we don't often get coming in that direction, because we make a very strong habit of losing to you guys, particularly when it comes to rugby. So I was feeling really great last night, and I spoke to one of my colleagues, and they said, yes, we've done really well in the medal tally, but if you look at it in terms of the rate per capita in New Zealand, killed us. So even when I think we're winning, we're not. But thank you for having me. So I'm going to cover a lot. And it's going to be a bit of a death by PowerPoint, but that is the nature of what we're talking about today. So I'm really excited to talk about some findings, a paper that's launching today, so you can go to the Green Building Council website and you can download the research. The research is the impact of green certifications, and we've done a bit of a case study that looks at the global sort of influences. There's some global context. And then we've brought it right down to local case studies where we've looked at some markets, and we've considered the premium or discount. I'll just leave it to you to determine which one you want to consider. We've taken a premium approach where we've considered rents, prices and values. So a lot to cover off, and I'm really excited about it. And we'll get to the actual findings of the presentation in just a second. I just wanted to set the scene a little bit, and we do this in the paper, and I think it's really important because we've spoken a lot so far today about regulation, and we've spoken about targets, and there are a lot coming at us, particularly as owners or lenders in the real estate sector, and I think they're all worth considering, and I was going to cover that off. But just a reminder, a lot of what is driving these initiatives to reduce carbon emissions and so on is obviously the global shift in temperature and so on. But it's not just about temperature. It's also about the carbon emissions, which we've covered in detail. And I think we always use this slide when we're talking to our clients, and the real thing to focus on is it's the exponential growth, right? So it's really interesting when I travel around, and I do get to travel around the world a little bit, and the response to particularly the greening of buildings is very different in each country. The Americans think it's a load of nonsense, and the Europeans obviously are setting the global standard. And it's that sort of two different bookends that I find really interesting. But when we bring it back to the fundamentals and we say, well, we can't deny that we are seeing increases and a rapid increase in carbon emissions. And what is the impact of that on climate? And I really like this slide because it just talks about temperature changes. So, what happens if we miss our targets across each of those different variables? And the key takeaway from this is, and obviously we've all experienced particularly the extreme weather events, is that we're already in that 1.5 degree space right now. So there is a fundamental requirement that we all sort of double down and start to make some change, because if we don't, the impact on society as we know it is quite profound. I think just some personal observations over the last 12 months. So I spent a couple of days in Dallas where it was 47 degrees and 100% humidity. I decided to go for a swim at the hotel. I jumped in the pool, and it was like jumping into a bowl of human soup because the water was too hot to even swim in. We were in India during the Modi election a couple of months ago, and we hit some 52-degree days, and you might have heard people died whilst counting the votes for the election. So, That's what we're dealing with. Now, what's interesting in that is that the whole time those buildings that I was in, the office buildings, are just churning away and pumping out more emissions, particularly in those two countries where the US is not quite there in their thinking. And India certainly is, because India, or it's going down the path of change because of the nature of the tenants that actually occupy buildings in that market. And I'll show you a slide on what's happening with tenants. So there's a whole bunch of forces that are driving change. Sorry, I'm just making sure I've got the right slide up behind me. We've spoken a little bit about the obvious ones just a second ago. There's legislation change, which I'll just give you a bit of a global view on that in just a second. Obviously, the occupier requirements we just covered off. So this is really economic stuff, right? Supply and demand. So if there's an undersupply and the demand is changing, then the market will have to respond to deliver product that is marketable. The other one that we're finding the most rapid level of inquiry and concern is in the financial markets, right? So there's a few things happening that are really starting to influence the way that lenders consider debt, both for new loan origination, but also for their existing portfolio. And I'll come back to that in just a second. And I guess, my title is I'm in charge of risk, but the opposite of risk is opportunity. So don't take the negative. It's not always the negative. And a lot of what we're focusing on in the report that's coming out today is what is the opportunity that having better product brings to us. So let's just have a bit of a think about the regulations, and there's a whole bunch of them. This picture is looking at carbon reduction profiles, and I think we've had some of this mentioned already this morning, but what you see across the bottom is whether it's net zero 50 or a less than 50% reduction, and then we've got the date and we've got the location. So Copenhagen leading the way with a net zero by 2025. The other one is where we're getting a lot of noise is London with 2030. So the impact of some of these targets is it really starts to change the behaviour of all of the market participants, right? So the tenants start to behave differently because they need to think about being good social citizens. The building owners are confused and panicked, I think is probably fair to say, of existing buildings. Some of them don't know what to do. Some of them don't even know that it exists. And the lenders are particularly in the UK and starting to think about it in places like New York, is they're starting to freak out about being left holding assets that have problems with interest cover. So if you don't have an energy performance certificate in the UK, you can't rent or sell your building. So if you haven't addressed that, and you haven't addressed it to a level that is marketable, then you have a problem. So you have a problem with your rent, and you have a problem potentially with selling the building, and you definitely have a problem with your lender, who's starting to think about how they either move you on. Or in some cases, and we're starting to see this in Australia at the moment, is lenders are starting to think about which parts of their portfolio are falling into the risky category as the loan renewal term comes up. So they're starting to think about how can they work with borrowers to actually reposition the building. So I think the negative view is you're going to get punted by your lender. On the positive side is lenders have an incentive to lend money. Lenders have an incentive to have greener buildings within their portfolio, and we're starting to see lenders think about ways of working with borrowers to reposition assets, which I think is really interesting in the context of the research that we're talking about at the moment. One of the other things that doesn't get spoken about as much is the mandatory disclosure requirements around sustainability for corporates. So you can see there which countries have adopted this. This is being driven by the International Sustainability Standards Board. And there's varying levels of requirements for reporting, but the simplest way to think about it is is if you are a corporation that is impacted by this, and I think in New Zealand there might be 200, largely the financial institutions, you have to think about your impact right through your entire supply chain. So in Australia, there's a number of clients we're working with at the moment. They have to understand what their carbon emissions and climate-related disclosures are at the corporate level. So, at the top level, that might be the listed entity. In the case of a bank, they have to go right down to the borrower and the real estate that the borrower occupies. So there is a big impost on the sort of financial community and the participants, not just to be doing this to do the right thing, but there's actually accounting type standards that are driving them to change. And I think another interesting, and we already saw this slide, I think earlier, or something similar, is what's happening in other countries. But I sort of already covered off on the UK experience with the EPCs. I think in New Zealand we're going to have the mandatory disclosure that I just mentioned, and I also. The experience has been in other countries that government starts to lead the change in terms of their occupancy requirements, and obviously that is something that you'll start to see here as well. So that's just some of the overarching forces that are impacting on the markets for real estate globally. And the other one that I find really interesting is this came from a study that we did in Australia, and we looked at the Sydney and Melbourne markets. So it's a bit hard to see, apologies, but they're the logos of all of the occupiers in the Sydney and Melbourne markets who have net zero carbon targets. So if you think about the demand side, which is what we're looking at here, where do they fall relative to the availability of stock? So there are many of those occupiers that are also present in this market, and they are the tenants that institutional owners in particular, or any owner, would love to have in their building. So if you want to have one of those tenants in your buildings, or a tenant that looks like that, if you don't have a building that is potentially a 6-star Green Star building, you're going to find it very difficult to either get a tenant that looks like that or to keep a tenant that looks like that. Just another case in point, just related to JLL. So I work at JLL, as the great intro mentioned. We recently looked to move. We also have net zero targets. There was only one building in Sydney that our firm could occupy. That's a brand new building built by Lend-Lease at 180 George Street. And even then, it didn't quite get there in terms of what our requirements are. So that's a new building that was completed during COVID, so not a great time. And despite what you hear about the office markets globally being highly vacant, that building is 98% occupied. And if you look at the profile of the tenants that are in it, they all sort of look like this. So most of the tenants who have gone to that building, all of the tenants who have gone to that building, in a really tough market, have gone there because it is has the highest green credentials. Just another little anecdotal interesting fact. One of the tenants in that building, the building is called Salesforce Tower. They're the largest tenant. We were working with Salesforce to try and find them some accommodation or some office space in Canberra. So I was reflecting on the timeline of change of the sort of greening of the built environment over the last 15 or 20 years. And when the Australian federal government said we're going to have mandatory minimum standards for our buildings, Canberra went on a great big, so owners in Canberra redid all their buildings to meet the standard at that time. Interestingly, when we tried to find a space to meet the requirements of Salesforce in 2023, there were no buildings available that met that standard. So it's an evolution, so things change and you need to be staying on top of the change. But I thought that the rapid, particularly the energy consumption requirements for those buildings is something that's really different to what it was when we first started looking at neighbours. The other interesting anecdote just on this slide, if I just go back to the US, and I mentioned a minute ago that when I'm in the US and I say, what about sustainability, they just roll their eyes, particularly if you're in Texas, and they say it's a red state, blue state thing. But if you say to an owner in the US, do you want one of these tenants? And they go, of course I do. And then what's your biggest concern in terms of your operating costs of your building? It's energy. So they're worried about energy and they're worried about vacancy. So even if you call it something else, just call it supply, demand and cost, it matters. So I think you'll see the US start to change. The other driving force behind all of this, and just something that I thought I should highlight, is there's also a change in accounting standards that come in January 2025. So the International Valuation Standards Committee has mandated, I'll just make sure I got the right slide, yep. So from January 2025, when you are valuing assets, and that includes real estate, the valuers need to consider the impact of ESG and make adjustments for any material differences. So what does that mean? Now, I was a valuer, and we've got a very large global valuation team, and we're all scratching our heads going, well, what does that mean? So the guidance that has been given by the IVS is to consider these things, and it's a big list. But I think, again, it's important because these are the things that are going to start to be considered, not just in terms of the marketability of the building, but the value of the building. Now, they're all sort of intertwined because if you get a better tenant, if you've got a better building. But this is a significant change that will, I'm not sure what it's going to mean. I know that certainly PINs, who are responsible here in New Zealand for setting the valuation standards for real estate, will adopt the IVS, as will the Australian Property Institute. So something to consider that will also start to impact at the finance side and the asset valuation side of things. So right, let's get on to the last 8 minutes. We're going to do a speedy run through. Now, really excited about this, so turning green to gold. I have to acknowledge the authors of this. I'm not one of them, I was a reviewer. But my colleagues, Dr. Georgia Warren-Myers, Georgina Chillingworth, and also the New Zealand Green Building Council, who participated, and Annabelle McFarlane, who is our research person based in Australia. So what have we done? So we've done this. So we've set out to quantify, is there a benefit in actually having a greener building? So what we did is we did some research. So we gathered a whole bunch of information. That was the methodology. We did some modelling, and we've come up with the results. A pretty good sample size, not for all building ratings. So obviously 6-star, Green Star, we didn't have much to work with, but we certainly had a good time series of sample, and we looked at Auckland, Wellington, Christchurch, and what we're testing is what is the premium for capital values market rents across the various ratings. So neighbours and neighbours plus Green Star versus unrated buildings. Okay, so does it stack up to bother? Is kind of the summary of that. And I've given you all the reasons from the global sort of forces, but these are the reasons in terms of the cash flow, if you like. So this is a vacancy by market. So the first chart there is showing, so the beige sort of coloured one, or the taupey coloured one, I'm being colour ignorant, apologies, versus Green Star whole market versus neighbours versus both together. So what you can see is the lowest vacancy, which is the purpley pinky colour, is for those buildings that have both ratings. The highest vacancy is the column there, which is the whole market. So what is also kind of interesting in this is you might just say, well, is it just that new buildings are better than old buildings? But we did use a modelling methodology where we've adjusted for those factors. So we are genuinely looking at the presence of the rating, not just whether it's a new building versus an old building. So consistent across all of those markets. When we look at occupancy, that's the inverse of vacancy. As sort of property economists, valuers, analysts, researchers, we tend to talk vacancy. This is the flip side of that. which is occupancy. So you've actually got a pretty good. I mean, these are not all buildings. I should just point out. So we're not considering, little tiny pieces of office that might be above a shop, where there's a bias towards the larger buildings that are monitored by JLL, but also those that are rated. So in terms of sales, so what's the premium in terms of a sales premium versus those that are not? So again, this is using a hedonic pricing model, which adjusts for those factors that I mentioned before. So we're not just considering old versus new. And we've looked at a couple of case studies in the full report where we've analysed some key sales. So if you look at the report, you'll see an analysis of some recent transactions. But again, it's giving us the same sort of trend, and that is that if you have a Green Star only versus Green Star with neighbours, so if you've got both, you're going to get a premium over having no rating or over the whole market. One of the interesting conundrums at the moment, and I spoke about this with a couple of you last night, is how do you actually measure the impact if you're not transacting? And there are ways that you can run an analysis on an existing project or a hypothetical project to undertake the same sort of analysis to get a similar outcome. So you can build business cases to this type of approach, which is helping many clients to understand where to focus their efforts. So if you own a portfolio of buildings and you're considering where to spend your money, let's say on an upgrade or a new building, sometimes it's difficult to know which one makes the most sense. So there are methodologies available to do that. And similarly on the rental side of things, is that there's an absolute premium on those with both Green Star and neighbours. But if you just look at the Green Star only, again, it's pretty good. But Green Star with neighbours obviously is getting the premium. And I think the new neighbours 6-star is actually going to pick up a lot of the variables that will align with some of those global models that we saw before. So I would expect over time, as we continue to monitor this, also with those large corporates driving the demand, you'll see a better, more differentiated trend with this rental analysis over time. So I think what does it all mean? And again, I'd encourage you to go download the whole report and read it. It's a 45-page document, but it is a really interesting read. And again, just shout out to all those that participated in it. But certification matters, and we see that, again, we present some of that evidence in the report, but every country where we've done this, certification matters, and it's not just about being a new building versus an old building. I think the forces that are driving change are multiple, so it's not just the market forces, it's all those different legislative forces, but absolutely there is an opportunity for growth, and I think as you go through the journey here in NZ, you'll definitely see the benefits. And a couple of other takeaways. I think existing buildings are the real conundrum, because do you just bowl everything over? And obviously that doesn't work. Or do you start to think about ways to improve existing buildings? And definitely when we look at the supply and demand gap in most markets, you cannot bring enough new buildings to market to actually meet demand of tenants that have set targets. So you do need to think about upgrading and modifying existing buildings, and that is obviously also the right thing to do. And obviously with new buildings in terms of design, it's a no-brainer. I think we've already heard the demand for the green building 6-star. So I think really start thinking about how you future-proof across all of those different market forces that I just spoke about. So think about what's happening with the lending side of the equation, think about the tenant demand, and think about upgrading existing buildings. So that's it. I've got 25 seconds left. Encourage you to go to the website, download the report. All of our contact details are on it. If you've got questions, feel free to sing out. And once again, thank you to all the contributors who made it possible. Yeah, go.
I really enjoy that, Tyrone. I love that. I love that list that you had of all the tenants and which ones has net zero targets and which one doesn't. And it so paints sort of this picture that sustainability is no longer a trend, right? Sustainability is the future of business, is the future of how people make decisions, over how we occupy spaces. But you must be a man that travels a lot. Is that right?
Yes.
Yep, cool. So from your travels, like, what have you seen around the world, and how does Aotearoa, New Zealand, compare to the rest of APAC? Tell us only the good news. No.
I think there's an openness to change. There's a real cynicism, I think, in many other countries, particularly the US. But if I think about broader APAC, the large investors that operate across the region, so Goodman, Frasers, and so on, they are right behind this, and looking to not only build buildings that are greener, but also to future-proof them. So, particularly the industrial operators, so they're looking at different types of construction so that they could potentially add solar panels in the future, right? Cool. So look, I just to go back to the answer to that question, I think you've got a small enough, excited enough market that you can embrace this, and you can actually make significant impact pretty quickly.
Yeah. And what is, on that question, what is, say, one thing that Aotearoa, New Zealand, could do better?
Oh gosh, now you're putting me on the spot. Look, I think that's a hard one to answer, but I think you've certainly lagged behind, but I think partnering, with the likes of, those of us across the ditch that can bring experience, and I think that approach is certainly going to get you there. And I think to continue to monitor the results of what we've just published today, so to build that story over time, and to continue to show that it's not just about doing the right thing, it's also economically sensible, and there's a strong business case. So it just takes away the, it's just a bunch of greenies trying to make us spend more money, because I think we can prove now that is not the case.
That's cool. That's really powerful.
Great.
Kia ora, Iho.
Thank you.
Thank you so much. Appreciate it.